Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
We're going to be talking about a couple of technology companies that are at two different ends of the technology spectrum. With Eric Dutram and Brian Hamilton, they are going to give us the lowdown on these companies. Eric, we're going to start with you first. You are talking about Advanced Micro Devices. This company's been around for a while, but analysts, it fell out of favor with analysts for a while.
Definitely.
Until they've had like a pickup in their stock price, right?
Yeah. That's putting it mildly.
Stock's up 128% year to date, I read, and 280% year over year. So now they've raised some fresh capital as well. This has caused analysts to jump back on the Advanced Micro bandwagon.
Yeah, we're definitely seeing a lot of analysts jump back into this story, and that's really evidenced by their number 2 rank. It actually just got upgraded into buy territory. And actually, if we look to the chart right here, we can see some of this analyst activity that you highlighted. Analyst estimates have gone from 6 cents a share 90 days ago to now a 2-cent loss right now, and that actually is a 50% earnings ESP for this current quarter. And then if we look to the current year, we also see some promising trends, 10% earnings ESP. So that's very promising for the company, and it sort of highlights how analysts are just now starting to embrace this company's story and their long-term future. It does have an A growth score, so that certainly helps with these metrics. And if we look to the other chart for AMD, we can see this huge gain that you mentioned. Stock was about $2 a share earlier in the year, and it's really shot up to this $6, $7 range. But once again, we're seeing a top 10% industry rank. It's a VGM, A momentum, and A growth. So even though the stock has run up quite a bit, there's still very promising trends here for AMD.
So I have to ask you, because inquiry minds want to know, from someone who looks at these things a little bit more critically than maybe the average investor, against that backdrop, is all the good news already baked in?
I don't think so, because we're seeing just these estimates come up right in the last week. That earnings ESP really signals that analysts are just now embracing the longer-term story. And while the value score is still just a C, you just have to focus on the growth metrics here. It does have an A growth, so there's still a lot of steam left in AMD, I think.
Okay, that sounds good. Brian, you're talking about InterDigital. It's a mobile technology and R&D company.
Yeah, they make components for cell phones, and they recently reported Q2 earnings where they beat the Zacks earnings consensus for the 6th consecutive quarter. And they saw a nice little price appreciation from that, but as of late, the stock is going through the roof because of royalty agreements and research and development. InterDigital just received a $200 million check from Huawei Technologies. They're a cell phone company out of China for royalties. Now, InterDigital is expected to sign 2 more royalty agreements with international cell phone companies by the end of this year, and a 3rd one in the beginning of 2017. Further, it's been reported that Huawei Technologies and InterDigital are working together on a research and development for further components for Huawei's cell phones.
Wow.
Okay, so this news, analysts just went crazy, as you said, with AMD, that they've been going up. If you look here, we have unanimous consensus here. Everybody agrees that this stock is going up, but this is just crazy. 30 days ago, Q3 estimates were at 40 cents. Now they're at $3.06. Q4 is up, fiscal year 2016 is up, and 2017 is up. Now, 2017 is up is just a bit, but they're waiting to see if these royalty agreements come through. If they do, expect that to come up. Now, as I mentioned before, they had beaten for 6 consecutive quarters. Now, they don't just barely beat these estimates, they're actually crushing them. If you look at their 4-quarter average surprise is 82%. Also, the company gives back to investors. They currently have a nice stock repurchase program, and they have a nice little dividend. So they're giving the investors money back, and they're investing in R&D, and they're getting royalty agreements. So this looks like a nice growth company through 2017.
Okay, sounds good to me. Either of you own these companies?
No, I do not.
All right. If it's more information on stocks you want, like stock picks, stock picking strategies, commentary, for example, then get on over to Zacks.com. That's our website. There's a lot of information there for you to peruse. You can link to it all right off the homepage. With Eric and Brian, I'm Terry Ruffalo.